Another week here at the beach, I fired up to talk real estate. What got Atlanta spring break in town. Woo! A lot of folks ripping it up. Love it. Love that they're here. We're also going to talk about prices, what's happened over time with prices here at the beach, which is super good, and where I think prices are going, both short-term and long-term. And it's a little bit surprising, I think, for some folks, because it's all tied to supply, demand, things like that. We're going to look at our feeder markets and where those are and how they're going to impact us. That's interesting as well. Let's go ahead and jump into it. Let's get after it. So much talk about what's going on. Our price is going to drop. Mortgage rates are high. Prices are high. Cost to own. All that stuff's so high. And true. No doubt. And there's a general feel that, yeah, prices are going to have to come down. There's a crash coming, just like in 07, 08 when the market tanked. I'm not seeing it. I'll show you why. Here, take a look at this. Let's throw up this graphic. 1995 to 2023. This shows the median sales price for condos in the Destin area. Look at that. $112,000 in 95 to buy a condo. Man, I wish I would have bought about 1,000 of those darn things. But I didn't. I didn't have enough money to buy them back then. But they were cheap, relatively speaking. They're probably expensive back then, but they're cheap compared to today. Today, it's what? 500 plus median sales price? Some of them are a lot more than that. I don't know of any, quite honestly, that are much lower. What this tells me is if you buy and hold, you're going to be rewarded. All right, cool. And I know there's a ton of people who are going to say, I know, but look at what happened in 2005 when the market peaked and then fell off and people lost their shirts. It's a thing, no doubt. Here's what I would tell you, though. Well, first of all, let me explain what happened if you weren't around for then. In the early 2000s, we had no doc stated income loans. No doc means you didn't have to provide any IRS forms if you were getting a loan. You didn't have to fill out a whole lot of mumbo jumbo like you do now to get a loan, right? You just basically went in there and told them how much you earned and they gave you some money. The banks turned around and sold those loans on the subprime mortgage market. They sold them as tranches. They got rated as A, B, or C rated, AAA rated, or whatever. And then they sold. Watch the movie Big Short or read the book. And they made a gazillion bucks for Wall Street and the bankers. So everybody was getting money. Didn't matter what you did or how much money you put down. This is interesting. They were interest-only loans. You didn't even have to pay on the principal. You only paid the interest. Amazing. So everybody's getting loans, drove the prices to the moon. As you can see there, they went from what, 215 to 520 in just a couple years. Straight up, Mount Everest. Boom, look at them things go. Then what happened is the subprime mortgage meltdown, banks started to fail, Lehman Brothers, Salomon Brothers, investment houses tanked, and the government had to step in and put a pause on things. Next thing you know, banks wouldn't lend for nothing. Developers went out of business. Whole neighborhoods were left. Foreclosures, short sales, everything. And it just forced the prices straight down. As you can see, they went from 520 to 230 almost overnight. It was nuts. I was here for all of it. And I remember it was nuts. What is going on? And then, it got its footing in 2011, 2012, thereabouts. It started a more normal climb again. It was hard to get loans still, but you could get them. You had a lot of documentation, a lot of down payment, a lot of all that. And no money down stuff was gone. 100% financing gone. All that stuff gone. You had to put money in. You had to have a skin in the game, as they say. But people were buying them. Things were going up. Rents were good. Lending was getting looser. The non-warrantable became warrantable, which means Fannie Mae, Freddie Mac, quasi-government entities started buying these loans from the banks again. So the banks would pull these things in, give you money, turn around and sell the paper to the Freddie or Fannie, and it was all good. Then COVID hits. Government prints money. Interest rates are down to 2%? The federal funds rate's at 0. I mean, it costs you money not to borrow. So people started borrowing. Cheap, easy money shows up again. Prices go to the moon. We go from 276 to 355 to 520. Just boom, boom, boom. Jumping by the minute. And what happened? The Fed gets involved and says, whoa, this is nuts. We got too much inflation. We got too much money chasing too few goods and services. We got to put a pause on this. First thing they did is stop buying these mortgages from these condos, right? The condos went from warrantable to non-warrantable. Easy for me to say. So the money started getting a little tight. And then the money got expensive. They raised the federal funds rate, 11 times in 13 months, the fastest increase in history. And that just put the brakes on all this. It got really expensive to borrow money, and it got a lot harder to borrow money. And the banks are pulling back. They have a lot of exposure on the commercial side. There's a lot of risk in the mid-sized banks. There's a lot of angst. You won't see it because they don't talk about it. There's a lot of angst in the banking world right now. They're carrying a lot of commercial paper, and as we know, people didn't go back to work after COVID. There's a lot of commercial properties sitting empty. Different story. But the reason why it relates to this is a lot of the same banks that are carrying your paper also carry the paper on these commercial loans, and they're nervous. Anyway, I don't see a crash coming. There's a crash on the commercial side. Let's go back. Let's go back and look at this. I'm kind of rambling a little bit. I just want to give you some background. Here's why there's not going to be a crash. Back in 2006, 2007, 8, 9, so around that area, there was a lot of inventory. We had condos coming on left and right. We had condos everywhere. And that supply is what caused all the problems. There was so much property to buy and no money to buy it, that combined together, you have a ton of inventory and no money. It just pushed prices off the cliff, and they just kept going lower and lower, chasing their own tail, the foreclosure short sales. It just crushed the market. We don't have that supply this time. Look around. You see any cranes anywhere? Condo-wise, I don't see any cranes anywhere. Even on the houses, sticks and bricks neighborhoods, you see a lot of neighborhoods going up. Builders, they're doing onesie twosies. The big builders aren't doing that much. I mean, they're buying down rates. It costs them a lot of money to build houses and stuff right now. There's very little supply. Country, I believe, is about 5 million units short of housing that is needed, that isn't there. There's no supply. It's expensive, yeah. And money's hard to get, yeah, but there's no supply. And what else they have now is a lot of people have these mortgage rates at 2, 3, 4% locked in. They're not feeling the pressure. Where back in, 05, 6, 7, 8, they had variable rates that were going up. They had no equity because they didn't put any money down. And prices were just falling by the minute. So they found themselves upside down, which means if they sold, they'd have to bring a check to closing that they didn't have in their checkbook. They couldn't sell. And they couldn't keep it because they couldn't afford the HOAs and the new rate on their loan. They were stuck. Foreclosure, short sale, banks didn't want them. They were giving them away. Oh my gosh, drove prices down. Again, let's talk about now. No supply. There's no supply. The inventory is still tight, very tight. And that's why you're not seeing a wholesale price drop. And because the mortgage rates are locked in at those super low basis points, I don't see it coming down. I'll show you. Look at this, you guys. Look at this. This is the number of condos that came into existence between 2005 and 2008 from Okaloosa Island over Fort Walton Beach, Destin, 38, and Panama City Beach. Look at Okaloosa Island. Azure Sea Dunes, Destin West, Bella Riva, Waterscape. I don't know exactly how many units that is, but I can tell you this, it's probably 400. Yeah, look at Destin. 18 new buildings came into existence in that 3 or 4 year stretch. That's a lot of supply. That's a lot of units. 38, 15 condos came to an existence between 2005 and 2008 on 38 alone. Panama City, 20 buildings. Treasure Island, Sunrise Beach, Boardwalk, Sunrise, Majestic Beach Tower, Splash. Oh my gosh, Majestic Beach Tower, Ocean Villas, Splash, Celadon. All of them. That's a lot of units. That's a lot of supply. So what happened is you had all these units coming on for sale. Nobody had money. They couldn't carry the cost. They had to just give them away, push prices down. So close your eyes and think of wherever you own property. Are there any cranes? Are there any new buildings going up? I can't think of a one. Calypso maybe in Panama City came on. All right, cool. So there's no supply this time. Then the folks that bought all those properties are sitting in either at low basis cost and low basis lending prices. There's very little pressure on them to sell. And why I don't think you're going to see these wholesale price drops. It's simple supply and demand. We have very little supply and still pretty strong demand. So back to the Destin condos. if you're expecting a drop off like we saw 8, 9, 10, no, not going to happen. Get Destin houses, same thing. They didn't get the same boost. And I think it's because there's a lot of primary residences. This is Destin, Miramar Beach, and Sandestin. There's still plenty of vacation rentals, but there's also a ton of primary residences, which are just more stable. So you don't see that big swing. But look at, since COVID, a lot of folks are moving to Florida on a primary basis. They're moving, they're living here. That's why you got so much traffic, even in the off season. Still, there's no supply. There's very few homes for sale. And if there's no supply, there's no reason for sellers to drop their prices. They'll just wait it out. 30A houses, big spike, just like we had back in the day. Cheap, easy money. Money got hard, prices came down. But we had whole neighborhoods. I remember on Inlet Beach, you had all these houses just right down there by the beach with that Tyvek paper wrap for construction just flapping in the wind because builders walked away from deals. There's so many short sales and foreclosures. We don't have that this go around. So without that supply, it's going to be very, very difficult to see prices come down. And if that's what you're waiting for, good luck. Okay, condos, same story. Back in the day, all those new buildings coming online, pre-construction, there was lotteries. People, I remember one buyer called me up. He was so excited because he got chosen to buy, this one was at Waterscape, and he got 2 of them. So he was able to buy at Waterscape on Okaloosa Island. He bought 2 of them pre-construction. He ended up short selling both of them. Here we are again. There's just very low supply. And you're not going to see these big buildings, these big boxes with multiple units in them. Developers aren't building that anymore. They're building fewer units, but bigger, right? So instead of selling 1 bedrooms that are 800 square feet, or 2 bedrooms that are 1,200 square feet or something like that, they're building these bigger units that are 3,000, 2,700 square feet, and they're asking millions for them. It's just a different thing. You're not going to see that volume anymore. That the supply is going to be a bear. Panama City condos, same game, right? All those new properties that came on the market, here they are. They were cheap, they were easy to get, and then they weren't. People stopped coming, the rates adjusted, the cost to own went to the moon, people jumped out, foreclosed. Jingle mail is what they call it. You mailed your keys back to the bank saying, sorry, don't want it. Drove all the prices down. We don't have that this time. There's no supply. Look at the houses, Panama City Beach houses, same story. So yeah, that's our market right now in a nutshell. What's going to cause a change? 1, prices of properties have to come down to pull buyers in. All right. What's the chances somebody sitting on a 2.5%, 3% mortgage that, $150,000 on a condo or a house that's now worth $500? What's the chances they're going to sell cheap? Not good. They got a 2% mortgage, 3% mortgage. Not much. What are the chances the Fed's going to drastically lower the rates? If the Fed lowers the rates, we're talking about maybe June now. They were March, not. Maybe June now. And even then, they're going to come down a little bit. And let's talk about that. If the Fed lowers the rates, what's going to happen to prices? Going to go to the moon, especially when there's no supply. So if you're a buyer, I would be buying right now. And if rates come down, I would refi. If you're a seller, is now a good time to sell? Easy question and answer. Depends. Why are you selling? And if you sell, can you achieve your goal for selling if you get a price, right? If you can't, email us, info@smartbeachinvestor.com. We'll tell you where the market is. And if you can sell, if it makes sense to sell at that price, you achieve your goal for selling, you should do it. If not, hang on, wait till the right time. That's the reality of the market right now. We have so little supply that it's going to, and the mortgage rates that are locked in, it's going to make it really hard for sellers to choose to sell. Until we get more supply or prices come down, of which I don't see. We got people from all over the country moving to the Southeast, moving to Florida. We got immigrants coming from all over the world to the U.S. and then from the U.S. to Florida. We got a lot of demand for our properties here. I can't see why prices are going to come down without a lot of supply. Where are you going to put it? Where are you going to put this new condo? Where are you going to put this new subdivision? Ooh. Yeah, don't look for that for a lot of relief. What else are we watching? This is cool. Feeder markets. This goes to our rental game. This goes to who's coming here and owning. Because as the country moves north to south, northwest to southwest, southeast, these states and these cities that are our feeder markets growing. And that's exciting. Austin, Texas, on fire, right? California is moving to Austin. Raleigh, North Carolina. People are moving north to south. Raleigh, Cary there, the Research Triangle, I think is what it's called. Houston, big feeder market for us. San Antonio, big feeder market for us. Dallas, big feeder market for us. If you didn't realize that Texas is a big feeder market for us, rentals and owners. Very cool. Atlanta, well, goes without saying, right? Oklahoma City coming our way. These are the top 20 fastest growing metros, and a ton of them were their backyard where they come and play. That's a good thing. There's your demand. Look for that to continue. Again, this comes back to me is if you're a buyer and you find something that works for you, the numbers work for you, you should buy, run and buy it. Because the future doesn't look good for cheaper prices. Tell me I'm wrong. Info at Smart Beach Investor. This is what we do. Let's talk about another thing, retirement. It's costing more and more to retire these days. I don't know if you've paid attention, but prices have gone up for everything. The Wall Street Journal came out and said the cost to retire nowadays is significantly more. 1.4, something like that, to retire. You gotta have $1,400,000 if you're gonna retire. They say you need 10 times your annual earning. Example I saw, take a look, 75,000. If that's how much you earn, you're gonna need 750,000 when you turn 67. And if you're a family of 4, you use 153,000, so you're gonna need $1,500,000. So I think the better way to go is to buy a vacation rental property, let somebody else pay it down your mortgage. Inflation and appreciation drive the value up such that you have that income coming to you. In addition to your 401k, IRA, ETFs, whatever else you're doing, pension, whatever. Go get yourself a vacation rental property. It takes a lot of that pressure off. It might even take all of that pressure off. Change your life. There you are. That's what's going on with Florida's Emerald Coast real estate this week. I hope you like getting these messages. I love sending them out. Love talking real estate. If you do like getting them, please hit the subscribe or follow. That helps me out a ton, and I'd appreciate it. Thank you in advance. But yeah, there you go. That's our week. I hope this week coming up is awesome for you, and let's talk next week.